Good day, Royals, and welcome back. Alright, tribe, let's level up. Now, today I want to find out a particular question, and it is concerning investing. So, let's find out some details. Now, we all understand by now that the DXY is a representation of the US dollar index. Alright, so with the method and system that we utilize, all we do is essentially look at bearish and bullish cycles so that we can make a guided and informed, educated decision to see how it is we can best place our investments. All right, so we are going to look at something here. Let me see if this is almost to its target profit after about 2 weeks, or is it 3 weeks? And this is the power of investing and not having to sit down and just observe and watch our charts every single day. With the power of swing investing, we are essentially allowing our investments to do what they have to do to reach its target profit. And in some cases, these investments can last for a week, 2 weeks, 3 weeks, 4 weeks, 1 month, 2 months, 3 months. And the beautiful thing about it is that the markets will continue to do or perform how they are supposed to perform based on their levels and their cycles. So that's one of the unique things about understanding this method and system, right? We can literally just adjust ourselves, be patient, and just see what these markets are really, what they are presenting to us. And we are just making a decision based on what it is we are seeing, and again, we just allow these investments to play out. We can see what went on with GBP NZD here. All right, this was a failed investment from roughly about 3 weeks ago, roughly, right? I was in just a bit early and I made one mistake, a simple mistake, which was to make my stop loss smaller than I was estimating for it to be, right? I had a stop loss of 150 pips, and something I will tell you guys, who cares if you have a stop loss of 150 pips if you are swinging an investment for 500 pips to 1000 pips? All right, who is going to judge you and tell you that a large stop loss is not ideal for an investment, right? So I don't know who came up with that concept that a small stop loss is ideal to have for any particular investment, because look at what went on here. I had this investment with 150 pips, but because I understood the cycle that the market was in, I was able to turn it into a profit, and this is 500 pips. So look at this. Yes, I was supposed to have a stop loss of 150 pips, but it was 100 pips. I got stopped out, right, at 100 pips, and I profited 500 pips. So essentially, I made 400 pips. Who cares? All right, if you have a large stop loss. So what's going on with GBP USD? We can see that they're in a potential mini bullish cycle, right? Just a retracement to potentially continue their bearish cycle. So of course we are looking out for that. All right, the entire community, the institute that I'm a part of, we are actually observing and monitoring these things. EUR/USD is also looking to do essentially that. All right, we are just looking like this. All right, it's a simple thing. Why are we looking for bearish movements? Well, essentially the DXY is on a bullish movement, so they're just essentially opposite. All right, so as simple as that. Let's go to Google. Let's find something out here. What is the success rate of retail let's not put investors, let's put traders. All right, what is the success rate of retail traders, right? Did I spell that wrong? Oh yes, I did. Double S, because it's more than one. Get it? So the success rate for retail traders is low, with most losing money over time. Bear in mind that was also me. Option trading, 80 to 90% of retail option traders lose money. I wonder why. This is due to factors like commissions, bid-ask spreads, and time decay. Let's show more. All right, overall trading, 70 to 90% of traders lose money. Right, this is due to factors like market competitiveness, the zero-sum nature of short-term trading. You hear that? You see that for yourselves, short-term trading, and the presence of experienced players. Now this makes a difference as well too. Remember guys, that when we are on these charts, something I'm going to definitely point out to you, that these cycles that we are looking at here before you, these cycles have been playing out time and time and time and time again. Let's go to the daily chart. Right, let's reset this. This has been going on. This is EUR USD. All right, these cycles have been playing out time and time and time again. All right, there are ways to just see these structures, and I will tell you this, even though you can see something like this is just an arrow, it is not a trend line. Let's just put that back there. But what I'm about to tell you is that I can draw a line here. All right, this is nothing against, because I used to do this, this is nothing against trend lines and all of these things, right? But I can draw a line here, and there is nothing stopping price from bouncing on this line, as people use this type of terminology for, right? It is just an idea, it's just a concept, but understand that there is a methodology behind these candles being printed. All right, so you can use trend lines and all of these things as much as you want. However, there's a back end of at least the business side of this industry that many people are not aware of, and it's just part of what it is I'm learning about and I'm executing. All right, so let's go back to this. So the presence of experienced players, and this is inclusive of all of the institutions, right? Remember that these institutions, they utilize liquidity to create that trading environment for everyone to see and for everyone to be able to participate in. And of course, your experience is what allows you to level up. All right, so this is me here just sharing some insights for you to also level up. So day trading, all right, most day trading is not profitable. Successful day traders may make a profit of 1 to 10% per month. Only a few are successful in long term. In the long term, sorry about that. All right, so it just goes to show that you have to have a process with investing. Is not just getting a simple strategy and expecting it to work for you. All right, I can tell you from being in that industry for over many years why I have had an emotional roller coaster ride where investing is concerned, and that is simply because I've tried many things that have been out there. All right, so shall we go on? Factors that can improve a trader's odds of success include market knowledge, research, a disciplined approach, and a quantitative approach. All right, Royals. So I'm just sharing these things with you. This is public knowledge. You guys can go and research even more about this. I just wanted to give you some insights as to how it is you can improve your investing for the foreseeable future. Remember that you are working towards building a legacy. It is not just about money. Once it is you understand the dynamics of the skill set, the money will automatically come, Royals. You need to let that soak in. All right, Royals. So with that being said, feel free to go and research more about investing and how you can improve yourself to improve your edge where investing is concerned. And with that being said, guys, I trust that you will all have an awesome day, and until the next video, Royals, have a productive day. Amen.